So good morning, good afternoon, depending on where you are in the world when you're tuning in. Welcome to this week's live stream podcast, live in the Make More Placements community on Facebook. Again, if you're listening on Facebook, if you're listening live, just put live and give us a like and put live in the comments so we know where you're tuning in. And if you're listening to the replay, put replay in the comments. Again, it just helps with engagement, helps us know you're enjoying what we're putting out, and I guess helps more people see it. Today we're going to talk about 3 numbers every recruitment CEO who wants to grow fast ought to know. So these are 3 critical numbers that you ought to know in your business. If you're listening on iTunes, don't forget to subscribe and leave a review. And if you're not in the Make More Placements community on Facebook, make sure you go ahead and join. Awesome. So 3 numbers every recruitment CEO who wants to grow fast ought to know in your business. So me and Terry were talking about this the other day, and sort of, with some of our clients, looking at the key numbers that you need to measure on a daily basis, key numbers you need to track. And obviously there's lots of numbers. Numbers in your business give you the data you need to make intelligent decisions about what you do to grow, what direction you move in, things that you carry on doing, things that you cut back on. Numbers are effectively everything. Data is everything. And there's lots of important numbers, but these are 3 of the most important ones, 3 of the ones that we look at when it comes to your business development, your marketing, your client attraction, your effectively your revenue growth. 3 of the sort of key drivers that we look at, and we're going to sort of walk you through what they are today, why they're important, and also how you can find out what they are in your business too. Reason being, like, why it helps you, if you're in a stage of growth, you want to grow your business, and most people who tune into this will be owners who want to grow. It simplifies that whole process. It makes it easier for you, right? If you're doing it without data, if you're trying to grow without these numbers, it's not to say you can't grow. It would just be you're heavily reliant on luck rather than having a proven process to follow or being able to make decisions based on proven data that you've got. Terry, anything you'd add to that?
Yeah, there's lots of things you've said there that sort of really struck a chord. First of all, there's a famous saying, I'm not sure who's responsible for the saying. The saying is, if you cannot measure it, you cannot manage it. Full disclosure here, if you'd said to me many years ago as a recruiter, do you know your numbers? The honest truth is I didn't. And, if you'd said, look, I think you need to know your numbers, I would have argued against it, saying, look, I'm great at recruiting. Let me just give me the job order and I'll find the candidates. That's what it's all about. It's about finding the candidates. But here's what we've discovered over the years: those recruitment and search business owners that know their numbers have stronger foundations, for want of a better word. Just over a year ago, the pandemic hit the economy. Some recruitment businesses went bust, and you will never see or hear them again. And when you talk to I know that's really struggled. And when you talk to them, one of the things that they were all saying was, "Oh yeah, the pandemic is what we know. Why we had to close our business down." And don't get me wrong, things were challenging, and the pandemic undoubtedly had a part. But I would also argue that the businesses that didn't survive were pretty brittle beforehand. And one of the reasons they were brittle was that they didn't know their numbers. I mean, there are so many numbers that they don't know, that they kind of guess. And we're going to look at some of those numbers today. And I promise you, by the way, once you get your head around this and you get these numbers, you implement this into the business, it will literally transform your thinking, which ultimately will transform your business to bigger and greater things when you get to know these numbers. The first number that we're going to look at is called your average LTV, which I always think sounds like an exotic skin disease, but it actually stands for the lifetime value of a client. Now, you ask most recruitment and search firm owners, do you know what your average LTV is? And they have no idea, and they do think it's some sort of skin rash or something. But what recruitment owners do is they say, if I get this client and I make a placement with this client, it's worth, the average placement value is 20,000. Lifetime value means as long as you have that client, on average, how long do you have that client for? On average, how many placements would you make with them? So let's say your average placement is 20,000. And over the lifetime of that relationship, you make 5 placements with them, and that's the average for your business. Then the average LTV, or lifetime value, of that particular client is 100,000. Now, here's why that's important. Once you know that, It means that you know exactly what you need to do to grow your business, and also what you need to do to how much you're willing to spend to acquire a client. Because in theory, and I'm not advocating that you do this, but if it was 100,000, in theory, if it costs you 50,000 to acquire a client, you're going to be in profit. But the majority of recruitment and search analysts that we speak to, they have no idea this number. And if they do give you a number, it tends to be a guesstimate. I guess it's about this. You can't build a business on that, on guessing. You're kind of relying on hope and guesswork, and there's no foundation there whatsoever. But those business owners that know that figure, the LTV, the average lifetime value, and whether your average placement is 1,000 or 100,000, it counts. If you think of, I always think of say a supermarket and the millions that supermarkets spend on and advertising to you and I as consumers, and you might look at it and say, well, actually, I spend 100 of my local currency a week at that particular supermarket. So that's what, just over, so that's 400 a month multiplied by 12. So yeah, so I don't know, use a calculator. So it's nearly 5,000 a year I spend at that supermarket. But often when we frequent a supermarket, we're going to be there for several years. And if it's a local supermarket, then that's 5,000 a year. Let's say you stay in that location for 10 years. Now it's 50,000. And the supermarkets, all the other companies, they know the LTV. They know if I can get this person into my supermarket and get to come on the regular basis, it's actually worth 50,000 in that particular case. And that's why they can spend that kind of money on advertising, because they know the return is going to be 50,000. But unless you know these numbers, you can't do it. Anything you'd add to that, Drew?
Yeah, I think, first of all, I think the average lifetime value is a number that we want to be increasing all the time, looking at ways that we can increase the value of every client that you bring into your business so that, overall the average is increased. If you don't know what sort of your baseline is, don't know what it is now, it's difficult to make decisions about increasing it. Like what do how do you know what to improve or what area to improve, right? So we need to know what it is, and it also needs to be an area that we look at in increasing, right? We want to, in a sense, like every client that you bring onto your business is an asset or should be an asset. And not looking at ways to increase the value of each client and not knowing what it is almost like buying property without knowing the value of that property, and also, an investment property this is, and not looking for ways to increase its value, right? And just sort of leaving it down to chance. Again, when we can get focused on this, we can, one, look at ways to increase it, which is obviously important, but two, I think you can make better decisions about what you invest in terms of your business. So sometimes we'll have conversations with recruitment business owners, and you may be talking about a particular marketing campaign, or let's say, for example, it could be direct mail, it could be LinkedIn ads, it could be hiring new team members, whatever it is. There's an investment that needs to be made in their business, and one of the responses you sometimes get is, "Oh, that's expensive," or "That's too expensive." And the reason they say that is because they're looking at the cost rather than what's it going to give me in return, right? Because I think sometimes if you look at the isolated sale rather than the long-term value, it's a difference of thinking a client is worth 10k, a 10k placement versus worth 100k. So then it's like, if we're making decisions about, okay, what would we be willing to invest to get 100k back? Again, we can make better decisions about our marketing, our sales, how we structure our business, and also look for ways to increase that as well. So first one is the average lifetime value of your client. So one, do you know what that is right now? Do you have a running number that that's the average lifetime? And two, like what are you doing to increase that? Because if you're not increasing it, you're leaving money on the table.
Excellent. And the second one is cost per acquisition. Do you know how much it costs to acquire each new client? Now, you take the cost of your marketing, such as your phone calls, perhaps you did an email campaign. Drew talked about direct mail, perhaps software, the staff, time on delivery, and any of the financials that go into winning a new client. And then you've got your acquisition cost. Now, this number is in relation to the average lifetime value. It determines how profitable your business is. Again, I'll go to far. Drew, please correct me if you think differently, but I'd say the majority of recruitment and search business owners we speak to, they don't know this number. But this number is critical to your success. If you don't know what your average acquisition cost, you don't know whether you're spending a lot or a little money to acquire a client. So, and again, just Drew gave a great example there. Sometimes we're talking to clients, they talk about bringing in consultants, or whatever, and they say things like it's expensive, and I'm puzzled. Well, if your average lifetime value is 100,000, and somebody's suggesting you spend maybe 30,000 to bring in a new consultant that may bring you 4 or 5 new clients over the year, then it's not that expensive, really, is it? And it's this not knowing your numbers, but making statements such as that. What else would you add to that, Drew, in terms of cost per acquisition?
Yeah, I think most people, again, most recruitment and business owners, you said how much does it cost you to bring in a client? I think 2 things go on. One, they sometimes, especially if they do contingency, they class a client of anyone that's given them a job order. And just because someone's giving you a job order doesn't mean they're going to pay you any money. So when we talk about cost per acquisition, I'm talking about cost for you to actually collect money from the client, not just work with them, right? So sometimes I think people get confused with that, and you hear people say, "I've got lots of clients." It's like, well, how many of them actually paid you? Oh, only you find out it's only a third of them, or only 50% of them that they've actually placed candidates with, right? So it's about knowing the cost to bring in revenue. So again, this goes back to your lifetime value. If you know what your lifetime value is, then you can make better decisions about how much you're willing to spend on, or invest, should I say, on bringing in new customers or new clients, right? So I think, one of the things that really got it for me is I remember being at an event, and the speaker said, "Oh, if I was to give you, if for every £20 or dollars you gave me, I gave you $100 back, when would you stop giving me money?" And obviously the answer is you wouldn't. You'd keep investing to get the return. And I think that's effectively what your business development should be. You invest whatever it's going to cost you in the cost per acquisition, cost to bringing in new clients, but you're also aware of what the lifetime value is. And ideally, to run a profitable business anyway, that your cost per acquisition is obviously a lot less than the lifetime value of a client. And the cost per acquisition is something you want to, again, improve by improving your marketing, improving your sales, improving your whole business development process. Because if we can get more clients, more business in for the same, for the same amount of work, or and also increase the lifetime value of the client, again, that's how you increase profits. But in order to do that, you need to be aware of what those numbers are. So 1, what's your lifetime value? And 2, what is your cost per acquisition? How much does it actually cost you to bring in new clients into your business? Does that make sense?
It makes perfect sense. Yeah, perfect sense. And the next one is what we call your buyback period. That is how long it takes to recover the cost of acquiring a client. So using the example that Drew talked about there, if somebody gave you 20 of your local currency, and every time you gave them 20, they gave you 100 back. That's the acquisition cost, so to speak. So let's look at some numbers. Let's say that your lifetime value is 100,000, and it costs you 10,000 to win a new client, but it takes you 60 days to collect the first 10K off that client. Your buyback period in that case is 60 days. But again, majority of recruitment and search business owners we spoke to don't track these numbers properly. And this is where they can have a cash flow challenge by simply not tracking those numbers. So I just want to recap that, because I know when we shared it before, some people have been a little bit confused. It's called the buyback period. That's how long it takes to recover the cost of acquiring that client. So try to think of an example. Let's say you did a paid advertising. So many recruiters do paid advertising on certain platforms to get business. So it may cost them, I don't know, £100 a lead, just for the adverts alone. And then you've got the cost of consulting and everything else. But if the LTV, the lifetime value of a client, is 100,000, and it's costing them 2,000 for the paid ad alone, and maybe another 2,000 for the consultant and everything else, it's a worthwhile investment. The challenge, though, is if it takes, in this case, 60, 90 days to get that first 10K back off that client, then your buyback period is 60 days. And that's the number that we're looking at, your buyback period. Does that make sense, Drew?
Yeah, it makes perfect sense. And again, most people that we speak to don't have any idea of what this is. So they probably know what their monthly expenses are, but they're not, and they know how many clients they bring in any given month. but they're not. They don't have like a rolling average of how long it takes from to take a client from stranger to client to paying client. Like how long does it take? You know, if you make, let's say, for example, a new LinkedIn connection today, what's the time period that it takes on average for them to go from stranger to new client? I think, again, as you said, Terry, if you don't know those numbers, even if you know the other two, it causes major cash flow issues. So what happens is you can get like a you know, a successful business, a highly profitable business, a business that's making revenue, you know, 6 or 7 figures revenue, but they've got major cash flow issues in the business. And the reason is not because of their, you know, their inability to make sales or anything like that, not because of their inability to make profits, because it's because of the buyback period. They're pumping all this money into the business, trying to grow. This happens a lot when people are trying to grow aggressively. You think they've got a scalable process, so they invest heavily into software, into marketing, automations, into team, like, you know, you name it. They're investing heavily without having a real grasp on, okay, well, how long should it take? You know, I know when I can bring clients in, that's fine. I've got a process to bring clients in, great. But how long is it going to take to actually, you know, break even on that? So my acquisition cost is, you know, whatever. Let's say, for example, like the acquisition cost is 10K, just for example, and their average placement fee is 5K. So they need to make 2 placements with a client to sort of hit that break even point, just for example. And then to make 2 placements, they know on average it's going to take 3 months, right? So you need to have those numbers. Without those numbers, we can't analyze the data and make decisions based off that. So anything that we do is a guess. Like, we know we want to grow, we're aggressively pumping money into growth, investing money into growth, but we don't. And it's not even like it's a bad investment per se. But you will get a return. But it's like, if you don't know when that return is going to be, you can run out of cash, which again, obviously can impact your business, because all of a sudden you're, you know, having sleepless nights worrying about how you're going to pay your team, how you're going to cover the cost of software, you know, how you're going to sort of feed your family ultimately. And it's not because of lack of profit or lack of.
Drew?
Revenues to your business. Secondly is, what's your average acquisition cost? How much does it cost you to bring in a client? And then 3, what is your buyback period? Know those 3 numbers. Again, we can make scaling easier and more predictable. And actually, like, we've created a calculator that helps you calculate these numbers in your business. If you want that, just write the word calculator in the comments, and we can get that to you. It's just an Excel document that helps you track these numbers on a daily basis that we use in our own business, and we've created for you as well. So just write the word calculator in the comments. And Terry, anything you'd add to that?
Yeah, that's absolutely free, by the way. That's calculator is absolutely free. And also, just to remind you, we're here every week, every Wednesday at 3 p.m. UK time. Our aim is to give you techniques, strategies that are going to help grow your business and help you win more business, help you make your business even more profitable. So if you've enjoyed this, please tell all your friends and get your friends and colleagues along to come and join us. This is absolutely free. There's no cost, there's no obligation, and we will do this every week, 3 p.m. UK time. We'll give free training. We've got the previous trainings that we've done. So if you want to go back and have a look at the other free trainings, please feel free to do so. If you want that free calculator, that CPA calculator, just type calculator in the comments box and we'll get that to you. Again, I want to repeat, that's absolutely free. There's no cost, there's no obligation. We'll be back here next week at the same time, at 3 p.m. UK time. Thank you very much for joining us today. Until next time, folks, take care, take action, and be relentless. Cheers, folks.